S&P 500 is making a push here. Things look really solid for US stocks. I don't know if you guys saw this, but Netflix also reported their earnings and up it goes. Check this out. You can't see it on the screen. That's because it's way up at $1,000 per share. Netflix absolutely ripping. And yet again, this is just a company that just wins and wins and wins. And a big reason for the hype around Netflix stock specifically is that they are starting to take over the live sports arena, for lack of a better term. Netflix stock is up 15% here today. They had great earnings. They reported excellent outlook, and with the live sports stuff coming down the pipeline for Netflix, this is a really strong day for Netflix stock. Again, trading at $999 per share. What's crazy about Netflix is that just a few short years ago, it was down at 175, right? So think about that. If you had bought that dip in Netflix, obviously I'm cherry picking here, but that puts you up 430 something percent on the stock, which is crazy. But yeah. Nick, shouldn't the heat map be done by actual versus previous and not actual versus forecast for optimal results? Definitely not. And I'll tell you why. We actually used to do it that way, but that is definitely the wrong way to do it. Because if you're doing actual versus previous, it doesn't account for seasonality, right? So here's the thing. CPI has seasonality to it. All of these things, jobs data, for example, has seasonality to it, right? People typically get hired less during the holidays. So if you only ever look at previous to now, it's actually a very bad indicator of growth or not, because almost always you're going to see a decline or a gain in certain parts of the year if you only look at previous versus actual. So instead, what we do, which is in my opinion far superior, is take a look at the actual numbers that come out compared to what the analyst community is forecasting. This will give you a much better read as to whether or not the data coming in is strong compared to what the market thought or weak compared to the market thought, right? We don't look at previous because previous to actual does not tell you all that much. There's seasonality mixed in, and there's just inevitably, it's going to be a weaker read on the economic data. But if you do actual to forecast, that's where the intelligence comes in. It says, look, everybody forecasted for the unemployment rate in the United States to go to 4.2%. It went to 4.1%. That's strong, right? But if you only look at the previous, then that doesn't give you the full picture, right? Does that make sense? Can you upload the podcast to platforms, to other platforms also? Look, I don't own the podcast. I'm just a contributor to it. So they put it, I'm not actually sure where all they put it. I know they put it on Spotify and on the marketpulse.com website, I believe, but that is where they put that. But I mentioned this earlier, guys, US economic heat map is up and running, but we are going to be adding the UK, Europe, and Japan to this list. And I can't wait for that because I think it's gonna be a game changer. It will give you an all-in-one spot to look at economic data for selected countries. And I think it's probably the best thing I've seen on the market for that kind of instantaneous, easy access, look at the economies of different places based on the core metrics, actual versus forecast, all of this data updating automatically for you. Again, that's why we built this table, is to make it simple, right? You can look at the US economic heat map and within just a second or two, you can get a general idea. If there's a lot of blue on this screen, it means risk on, generally speaking. And if it's a lot of red, it's more risk off, right? But yes, by popular demand, we've had so many requests. Hey, can we get a UK? Hey, can we get a Europe? Hey, can we get a Japan? So we're going to do those three, and we'll roll those out within the next few weeks. So stay tuned. When, Nick? Yeah, next few weeks. These things take time, but we'll get them out as quick as we can. Because again, like I said, by popular demand, we had tons of people send us that message right away. I thought my initial thought was like, oh, U.S. economic data is the most critical to most traders. But then immediately many people were like, well, can we also see the other ones? So
the Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
So NASDAQ is up 0.8% here. Look at this chart, guys. NAS looks excellent. NAS looks very, very good. Breaking out of this kind of downward structure that we saw. We even saw, this is the icing on the cake, breakout, retest of that same trend line area and shot off of that area. NASDAQ looks primed, in my opinion, as I've said for the last few weeks here, to return to those highs and potentially break out. If I take a look at the S&P 500, I think it looks even better. The S&P 500, which I have a trade on right now, did the same kind of thing. You can see we broke out of this downward trend line structure, then retested the area, shooting through. This is why I love the daily chart, is I feel like I get such a clear picture on the daily chart of what's happening, right? We consolidated for a while, but we stubbornly held this support area. I bought into this area and my entry was not perfect because we did take some heat on the trade, but it reversed course beautifully. And so I'm not an ICT or a smart money concepts trader or a Wyckoff Springs. You guys know Richard Wyckoff, if you've ever heard of him. He's like the original accumulation, distribution, manipulation guy. He found those topics like, I don't know, in the 50s or something, like way a long time ago. Anyways, there's one thing about the Wyckoff methodology or whatever. It's called the Wyckoff Spring. And years ago, I remember my dad and I were sitting in the living room and we were studying Wyckoff stuff. And the Wyckoff Spring method or idea is that oftentimes before you get these very big breakaway movements, like we're seeing on the S&P 500, you get what is called the Wyckoff Spring. Has anybody heard of this before? Anybody heard of the Wyckoff Spring before? I'm going to go ahead and stop right here though and just tell you I'm not speaking voodoo magic. I actually think, to be completely honest, technical analysis, in my opinion, is completely overrated, but I use it. So I'm not saying it's useless, but the Wyckoff Spring method is going to sound like candy. It's going to sound like icing on a cake. It's going to sound like lose 25 pounds in 20 days nonsense, but it sometimes is magical. So let me show you. The Wyckoff Spring method is the idea that when you have a key support level, and many traders call this, you can call it whatever you want. I don't care. You can call it a liquidity grab. You can call it a false breakout. You can call it a Wyckoff Spring. Doesn't really matter what you call it. It's simple trading psychology. Nobody invented this stuff. This is just human nature. Okay, look, we have a support level that everybody is watching. Then that level gets tested and briefly trades underneath that level that everyone is watching. At that time, whether you call it a liquidity grab, a false breakout, a Wyckoff Spring, whatever, heavy-handed buyers rush back in quickly, recapturing that area, and all the people that got psyched out to the downside thinking, oh, it's breaking out to the downside, or it's breaking down, it's failing out here, they reverse course, they short cover, and the buyers rush back in, oftentimes causing these very violent moves higher. You can call it whatever you want. For example, Abdul calls it a trap and break, right? Last push before the rally. Completely don't care what you call it. You can call it a Wyckoff Spring. And I like Wyckoff Spring because, of course, that's like my roots. I think 10 years ago, my dad and I were sitting in the living room watching videos and reading about Richard Wyckoff's methodologies and fascinating stuff. It's kind of like nostalgic for me to think about. But this idea that you've got a spring, you've got accumulation occurring, and then the spring winds up and you get this false break to the downside and the spring unwinds quickly, shooting us to new highs. Again, have your fancy, call it whatever you want, have fun with technical analysis. But at the end of the day, technical analysis is useful, but it is not what made me profitable. Fundamental analysis absolutely is way more important. Dollar pulling back. I actually picked up a long position on USD CHF this morning. Let me see if I can show you what that looks like here. Give me a second. Go to Forex trades. And yeah, so I bought a initial position on the USD CHF. I've been trading this thing a lot here recently. It pays a positive swap to hold it, so I don't mind holding it for weeks at a time if needed, but or months even, really. But I took up an initial position on the USD CHF right around this area of support. I have willingness to buy more of this currency pair should we see larger pullbacks. I would love to see actually a larger scale pullback on the dollar, at which point I could add some longs and build a position on this one. So I don't mind the initial trade here. If it wants to rip back higher, that's been what has been happening to me with these trades. Is I've been buying in for my initial buy and then just rips. Buy in for my initial buy and then it rips. Buy in for, well, this was an attempt, made profit there, bought again, closed it and bought a new setup, and then you can kind of see what has been happening. But if it wants to pull back further, that'd be great. I could get a bigger position built. But if it doesn't, I'll just keep pocketing the profits and moving on.
I also want to just quickly update you guys on my trading. So I had a little bit of a rude awakening, sort of the end of last week to sort of the start of this week. So the capital gains tax in the UK has been decreased, which I knew, but to be honest, I completely forgot about. So that means I'm going to have to move back towards spread betting. So I'm still in euro dollar and pound dollar. Euro dollar and euro pound shorts on my MetaTrader account. So that's still alive. But I'm just going to close out those, manage my way out, and then start transferring over to spread betting again. Because spread betting is tax-free in the UK, whereas CFDs are classed as capital gains. So it just makes things a lot cheaper and a lot easier for me. So that's that. Of course, I'll still share all the track records and broker statements and things from that. But, I don't want you guys getting confused when you see me slowly switching over to a different platform. Rudy, hello. Anwin, good to see you guys. Anyway, let's go on to the charts. As Nick said, yes, one-time payments are generally better. Obviously, it's better for you to funnel money into capital every month rather than services. So gold, let's have a look. Gold did have a breakout of the resistance. I think we spoke about this a couple of days ago. Royal Trades, hello, good to see you. Sean, hello. So yes, we did have the breakout of resistance on gold, which is a positive sign for the bulls. Obviously, the bears are not going to be very happy about this. However, I would now shift more towards going long on gold, mainly based around sort of inflationary pressures on the US, but it's not, in my view, it's not the best trade there is. So the only opportunity I would be happy to go into on gold is if we saw, well, we've got the breakout. If we could have this retest of the resistance and then continue to the upside towards 2,800 and create a new high. At the moment, it's obviously too late to start buying, and there isn't really much of a reason to go short in my view. So yeah, that's basically all I see here on gold. It's just waiting for that retest. Sean, not for trading, no. So obviously Elite Trades is set up as an LLC in America, but I don't trade under Elite Traders, I trade under me. So it's a lot more beneficial for me to just use spread betting, which again is tax-free. But yeah, I don't want to be paying taxes if I don't have to. Hey James, I was wondering if you could break down what's been happening to the US dollar past couple of days, because it seems rather confusing for me at least. Yes, Cal, the US dollar has been, quite confusing. I've been a little bit mixed up on the dollar as well. So the way I see it, we had quite a few things running in favor of the dollar. We had positive labor market, we had rate cuts slowing down, now looking towards more likely a rate hold this month. So this was all very good for the dollar. We obviously had the Trump rally as well. However, we've had a bit of a cool down on the US data. It looks like we are going to see a little bit more rate cuts from the US, possibly in March, I think is the projection. And the Trump rally seems to kind of be over now. Obviously, Trump's in office, and if we look back in 2016 when he came into office back then, we see the same thing. So we had the rally to the upside, and then we had a pretty nasty 15% drop down. So we could be looking at a very similar thing where we just see the market relax. Again, the sort of market conditions have slightly changed. I mean, in my view, the dollar is still bullish. I don't really see a reason to get short yet. So I would be more expecting a rejection here and continuation to the upside. So we'll have to see how that goes. But that's basically it with the dollar. We just had a little bit of unwinding, I guess you could say, or repositioning in the markets. Tom, good to see you. No positions open for the Bank of Japan decision. The yen isn't something I trade very much, at least these days, so I'm kind of sat out of the yen. I do expect them to hike rates, but the Bank of Japan can be a little bit tricky to try and trade around. So it's not my favorite thing at the moment. What impact does that have to the brokers? So I use for spread betting. So I use two accounts. I mean, I've been quite open about this, but for anyone that doesn't know, I have two trading accounts. So I've got the small account that I use for sort of public things, which is the CFD account with Blueberry Markets. But my main account is on IG Market spread betting, and again, that's because it's tax free. So I don't really, I don't really have to worry about how much I make or filing taxes on it or anything like that. So it's just a lot easier, which is why I'm just going to shift over again the public account to spread betting. So the reason I entered here is because although I'm not quite as confident in dollar longs as I once was, I still view this market as bearish. I'm still very comfortable to say that euro dollar is favored to the downside. Again, we saw, or we are currently seeing, it depends how you look at it, but the dollar isn't exactly doing the hottest right now. Although the fundamentals, the drivers behind the dollar outweigh the euro quite significantly still. There's also something I actually wanted to show you, which is here. So this is from UBS. This was sent out. There's not actually a date on here, I don't think. Well, it was sent out yesterday. Oh, there we go. 2 days ago, sorry, 20th of January. So UBS is currently looking for shorts, or talking about shorts at least. So we can see euro dollar set for another leg down. Firmer US economic activity is likely to trigger a test of euro USD parity before the pair moves higher again into the 1.05 to 1.1 range towards the end of the year. So essentially what we're looking for is a continuation. It might not be now, it might be next week, it might be in 2 weeks, but we're looking for a continuation down to parity on euro dollar before we start heading back to the upside at the end of the year. We adjust our forecast lower to 1.0, which is parity, 1.02, 1.04, and 1.06 from 1.05. Feel free to screenshot this, by the way. I'm going to sort of ramble through it. At least in the short term, the need to hedge US dollar longs is not warranted anymore in our view, but the dollar is trading on the lofty side. Managing excessive exposure will likely remain a hot topic for the latter part of the year. So again, feel free to screenshot because I'm not going to read all this if you want to. But yeah, basically institutions, at least UBS, is still looking to short euro dollar, which is a nice confluence for me. So if we look on the technicals, didn't mean to draw that arrow. If we look on the technicals, we've had a pretty solid pullback. On the daily, it doesn't look like much, but it has allowed some more sellers into the market. We've also got some buyers out of the market, so it would be the most sensible place in my view now to continue that rally down. We do have this really nice level of structure. We've just broken above our 200 moving average on the H4, which to me doesn't look unbroken yet in terms of the trend. So I'm quite happy to stay short for now. If we do start breaking above this level and we see a continuation higher, that's when I'm going to be possibly changing my view on euro dollar. But again, at the moment, it's kind of unchanged.
last week I closed out some of my bull put spreads in the 600s on the SPY for a small loss. I mean, I saved some risk on it. I think I saved myself maybe 30 cents a risk, 35 cents a risk. It was a 2 to 3% probability of coming back to this level as of last week's trading. Because you look back a week ago, where were we? We were all the way down here. And this market has screamed to the upside. Now, I did place a trade this morning. If you are interested, which I could post this in the poll alerts, it is a bit of a fancy trade. But I am looking at something out 30 days for a little bit of income and a potential profit trap. So it's on the SPX. And I bought the 6290, sold the 6300 call. That creates a bull call spread. And then I sold the 6340 and then bought the 6375 to create a bear call spread. So I have a profit trap up here. It's out of the money. If I show you on the risk graph right now, it is looking like, let's float this back here. Looks like this. So right now this is trading for about $1.30 to $1.40 credit. Now the way this trade works is this is live price. So for about $1.40 credit, if price just stays where it is over the next 30 days, price can go up a little bit, okay? Price can go down a little bit. Price can go down a lot. Price can go nowhere. And you can keep that $1.30 to $1.40 credit. So this entire area here is about $1.40 credit. Now this profit trap is if we're greater than 6,300, we have a $10 profit trap. So this would be 10 plus the $1.40 that you pull in for credit. Let me go back here. So 10 plus the $1.40. Right? So that'd be a max of $11.40 max profit. Now the risk on this trade would be if we're greater than 63.75. 63.75 is where I start taking on some risk. Okay. So I'll post the trade right now, showing $1.40 to $1.60. If you get, I got filled for $1.25, so you might actually get a better fill than me if you want the trade. There is risk in this trade. There's still a risk of about $2,300. There's a profit trap potential of about $1,100 is like the perfect trade. So it's either going to be I make $1.25, okay, I make $1,000, or I can get this perfect trade at $11.25, or worst case is I lose about $23.75. That's worst case. So I have quite a bit of number of ways to do it. I've got about a 90% chance of profit on the trade mechanically right now. The reason I decided to do this trade is, look, we've had a pretty amazing run, but if we don't have a 10% move, okay, we'd have to essentially look at this and say from the January 13th low, this market has gone up 10 freaking percent, right? That is a 9% move to get to my bull trap. And this would be, in order to threaten my position, we'd have to go up 9.8%. I mean, I'm not saying it's impossible, but I'm saying it's unlikely. So that's the trade that I'm taking. All right. Also, if you took the trade with me yesterday in the poll alerts for Netflix, Netflix just absolutely destroyed earnings, and we have 2 more days in the trade. Now, I need Netflix to stay above 920, and so I put in a pending order today on Netflix to close it. I'm not taking less than like 490 or 495 on the trade. Right now it's trading for about 475, 480. It was up to $5 earlier. I'm going to go ahead and put in a 4.90 credit today. If it fills today, awesome. I'll take, all but 10 cents of the trade, and we might just require the day to close out. But Netflix was well above expected moves. I calculated out about a 10% move, which past earnings did about 6 out of 10 times. So I had forecasted about an $85 to $86 move. I priced that in with my bull call spread and my bear put spread, and so I'm losing on the bear put spread. So I'm losing on the bear put spread, but I'm winning on the bull call spread, and the net profit should be around. I took this trade for $275, which means my max profit's going to be about $225. So I can lose on one trade and win on the other trade and still walk away with 225 credit per or for the trade itself, which is not bad, right? Trading the earnings play both sides and still walk away with a nice return on capital. Worse, my max risk would be 275. If I was dead wrong, 275 is my max risk, but to make 225 out of 275, I'm making 81.8% return on risk. It's not bad. Now, I obviously need price to, hang in there and just not collapse down to 920. So I'll go ahead and set a chart alarm here. This is by Friday, by the way. So 920 expiration. But I don't want to close this trade out for anything less than, I'll say this. I'm not going to let it turn into a losing trade. I will say that. But I'm going to try to get this trade closed out for like 490 or 495 credit to take as much of the profit as I can. Because right now the probability of us coming down, if I go to the expected move here, there's only about a 10% chance that price would come back down to 920. Okay. So I like the probabilities. I don't want to close it out right now and say like, oh, I'll just take my, 450 or 460. It's like, I'm going to try to get 485 or 490 for the trade and let it close today. If it closes out, I'll update the pulver alerts. All right. So that's notable on Netflix, way over expected moves. What this does tell me as well is if the market is excited about something, man, they're throwing a bunch of money at it. So if we have like, let's say when we have Mag 7 earnings that are probably coming up in the next week or two, if the market is liking the beat on earnings, so it's EPS or revenue, if it's liking whatever the consensus is, then we could have better than expected moves. So it wouldn't surprise me, but I also think that with this bar count on Netflix, I don't know. I don't want to call the top here, but I wouldn't be surprised if we fade this move. The stretch away again, they're like, this is a lot away from the 200 moving average. It's 26% away from it, and it's also bar count wise about 320 bars from the last time we touched it. So anyway, we'll see what happens. We will see what happens. All right, so that is Netflix. Okay, for the week so far, let me go back down to the 5-minute time frame. A lot of gaps in the last week of trading. We've had 8 days of trading, and we've had 4 pretty sizable gaps. So this was our CPI gap right there. Shortly after that, we created another gap. Even yesterday's gap didn't get filled. So there's still a gap there, and then another one that gapped up about 0.48 to 0.5%. I'm just thinking as we approach these all-time highs, we could see some resistance at those all-time highs. It's been a nice little recovery, obviously, but only having a 5 to 6% pullback on the S&P, a 7% pullback on the NASDAQ. If that's it, I don't think that's enough. I don't think that's enough to justify full-on buying spree. I think that, yes, a rotation out of Mag 7 and elsewhere is helping. The way that price has gotten back to these highs has been pretty inefficiently. So I don't know. I'm just a little skeptical. Am I calling the top? No, but I'm just a little skeptical to think that we have some resistance here. But there's clearly some renewed optimism going on this week, and Trump stepping into the office. Be prepared to hear from him every single day, for better for worse. And we'll see if this market is just like crazy optimistic. But I have my doubts. I think that if we take a look across the board, do our top down, 0.6% on the S&P, we're up over 1% on the NASDAQ. The Dow is, again, fractionally up. It's up about 0.25%. Russell is down. So we have the growth, right? So the top 200 growth on Russell is up 1.4%. That is pretty much matching the NASDAQ, but your IWM is down 0.5%. And your value is down 0.3%. VIX is getting suppressed once again. Let me just go back to SPX here. VIX is down. So VIX is down to 1492. I suppose if the VIX is going to continue to push lower, if VIX pushes lower, then we probably have the market melting up a little bit higher. SVXY still making its way back up. I'm just going to keep an eye on this. If we have any type of like correction, I'm just going to end up buying or putting on some option trades in SVXY. DXY, decent pullback. I'm gonna look at the comparison between the DXY and the 10-year yield. Oil still fading a little bit. Possibly support on oil at the 200 moving average around 74.20. Watch for potential bounce here. So if we can bounce off that 200 and look for a closing candle, there might be a nice little scalp opportunity to get back to these highs. Oil is going to be a really big factor on inflation with energy prices this year. Natural gas, same thing. So, watching these closely. My UNG position is, out in time, not worried about it. I'm trying to see if we get into the 20s. Gold having another, honestly, it's a great week on gold. So far, gold for the last how many weeks? 1, 2, 3, 4 weeks in a row, we've had a nice little surge on gold. So from the lows around 25.95 to current price, we're up around 6% on gold for the year so far. That would be end of December into the first part. Yeah, we're up about 5 or 6% year to date on gold. Not too shabby. I still like gold longer term. I just didn't get the deep enough pullback to buy where I wanted to buy. So I'm just maintaining the core position that I had last year and carrying that into this year. If there's any range trade, I keep mentioning this, coming back to this level here, finding some resistance. If this is a range trade, I'd be happy to establish, more core positions. I'd be happy to establish some out of the money option plays on gold, but I'd still be looking to edge higher. Okay, silver has actually been lagging. If you look at gold versus silver, so gold is up to some recent highs the last four days of trading, the last 4 weeks of trading as well. Silver is not quite there yet. I want to see if silver can get back to 32.25. If you look at gold versus silver, we're seeing this push back up towards these highs. Now, one thing that would be kind of nice to see, just based on this range, this is gold compared to silver, would be that we run into some resistance here and we see this head back lower. I'd like to see silver get the upper hand, at least from this chart, and see if my silver trade can catch up and gold can still maintain bid. But I still like both gold and silver to the upside for 2025. Bitcoin, bit of a pullback after the poke of the highs at 109. Possibly a range trade. Maybe some more accumulation happening in this area. So if this is a nice little bull run through the election, a wave or flat pattern where we can find some equal lows, I wouldn't mind getting some pullbacks into I'll just say 90K. If we're close to 90K, that's at least like position one to scale back in. If it ends up falling back down into deeper corrective levels, that's okay. I'd still be buying this thing around the 80 to 70K level as well. So a couple of dollar cost average spots, but I'm going to be patient. I have ownership of BITO, ownership of IBIT, ownership of FBTC, ownership of MicroStrategy. If we're going higher, there's plenty of profits that I could roll with. What I'm looking for is if I want to add to any positions or generate some income trades, I've got to be patient on my technical levels.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.